Get ready. Today, we're dissecting a critical market shift and revealing one specific stock with extreme upside potential. This is a company that has just teamed up with giants like NVIDIA, Alphabet, and OpenAI. It boasts outsized growth, long-term proof of concept, a formidable competitive moat, and multiple near-term catalysts. But first, you need to understand the macro environment. What you're seeing is a historic divergence between U.S. job openings and the S&P 500. This gap has never been wider, and it's not a fluke. It signals the early stages of a trend that will redefine our economy for years to come, a trend that will create significant societal challenges, but also immense wealth-building opportunities for those who are prepared. The reason? Massive capital is flowing into the economy, especially as rates are cut, but it's flowing into sectors that don't create many jobs. Think about it. Giving $10 million to a tech company to build a data center might create 3 jobs. Giving that same $10 million to a traditional business creates dozens. This is why we have record market highs but stagnating job growth. The productivity gains from AI and automation won't go to the average worker. They will flow to the stakeholders and shareholders. If you ignore this trend, you risk being left behind. So, how do you protect yourself and build wealth in this new paradigm? The strategy is clear-cut. You must focus on stocks that have outsized growth rates compared to their peers. Long-term proof of concept, a beautiful, wide moat to keep competitors at bay. This isn't just theory. We've used this blueprint for years to identify winners. We called out Palantir at $7, and it hit $190. We backed Robinhood under $18, and it rallied to $145. We identified breakouts in companies like AMD, Applied Digital, and Sophie, all of which saw massive runs. Even when everyone called NVIDIA a bubble in 2023, we held our conviction based on these criteria, and it soared from a $1 trillion to a nearly $5 trillion company. The takeaway is not about being right 100% of the time. It's about having a disciplined framework. When a company earns your conviction by executing on these principles, you hold through the volatility. The market won't always reward winners in the short term, but over the long run, quality always prevails. Now, let's look at some specific plays. One powerful trend we're tracking is the government's move to back companies in critical resource sectors, particularly those supporting AI and military infrastructure. We've previously called out MP Materials, Intel, and Lithium Americas before their official deals were announced, and each saw explosive rallies. We've now added a new stock to this watchlist, US Rare Earths, USAR. Reports indicate they are in talks with the administration for a major deal. Why? National security. China controls over 80% of the global rare earth supply, which is essential for defense tech, drones, and radar. A U.S. government stake in USAR would secure a domestic source for these critical materials. The stock just broke above the key $20 level, and any positive news from these talks could send it significantly higher. Another one to watch is OSCR Health, OSCR. With connections to the Trump administration through the Kushner family, OSCR is poised to benefit from potential loosening of ACA rules and expanded private insurer participation. The stock has already moved from $15 to nearly $22, and a break above $22 could accelerate its momentum. Now, for our main entree, UiPath, ticker PATH. This is, in my opinion, one of the most undervalued stocks in the market today. UiPath is a leader in enterprise automation. Its core technology, robotic process automation or RPA, uses software, robots, to automate repetitive, data-heavy tasks. Things like filling forms, extracting data, and moving files. But UiPath has evolved far beyond simple RPA. It's now a full-stack AI automation platform. Consider these facts. It has $1.49 billion in revenue, and $6.85 billion market cap, 82% gross margins, a recurring subscription model, and virtually no debt. It has official collaborations with NVIDIA, OpenAI, and Google. You would think a stock with these credentials would be up 50% or 100% this year. but it's up less than 5%. The market is completely overlooking its potential. These partnerships are a game changer. The integration with OpenAI and Google allows UiPath's automations to leverage the most powerful AI models for reasoning and decision-making. The partnership with NVIDIA provides the GPU muscle for complex computing tasks. Together, they transform UiPath from an RPA company into an indispensable AI automation partner for the Fortune 500. With over 10,000 customers, high retention rates, and a "do more with less" corporate environment fueling demand, UiPath is perfectly positioned. The current valuation is a disconnect from its fundamental strength and future potential, making it a compelling opportunity. So there you have it. The macroeconomic shift is clear, and the blueprint for finding winning stocks is proven. We've given you specific government-backed ideas to watch and our top conviction pick, UiPath. We want to hear from you. What are your favorite stocks right now? Do you see the same potential in UiPath, or are there concerns we should discuss? The conversation is critical. If you want to get all our real-time ideas and trade alerts, make sure to join us in the Discord. As always, you are the one taking the ultimate risk, so you must be the one doing the ultimate due diligence. Do your own research on every idea presented.